Hi guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host, Hamza Chowdhury. It's May 17th, 2021. I know some of you guys have been wondering when are we going to see a new video. I'm actually in the process of moving, so I apologize. Some delays on my part for getting out some new videos. I did want to make this video today. In this video, I'm actually going to talk about sort of explaining the stock market in layman's terms, talk about sort of the mindset of how the market works. And I really hope that if you guys can watch this entire video that you find it useful, find it helpful. And if so, guys, as always, I appreciate your support. Hit that like and subscribe button. As always, guys, I do have an exciting announcement. I mentioned last week we do have a pro trader that I will be interviewing relatively soon on this channel. And what I wanted to do was give you guys a shot at shooting me an email with a question. You can post it below as well. You can post a comment, a question that you would like to ask. If you had a moment to ask a pro trader a question, what would it be? What would you like to know? And so please, you can email it to me. You can post it in the comment below on this video, and I will be essentially, adding that question to my list. And so with that said, guys, I really hope you find this video useful and smash that like button as always, guys. And so imagine for a sec that you're at a grocery store, okay? And so what I'm going to do is sort of break down the stock market into really shopping at a supermarket, okay? And so let's assume that you're a pre-market trader, okay? So you're someone who likes to go to the shopping, the supermarket early. And one of the things that you notice is when you get there is what? There's probably not a lot of shoppers, okay? It's kind of like the pre-market, right? Where you essentially don't see a whole lot of activity and volume. And then also you may, you go in the store and you're there, you're probably, early, 4 a.m. is what most people do. They get in at 4 a.m. and they look around and they say, yeah, there's not a lot of people and there's not a lot of volume. There's not a lot of transactions happening in the store. Okay. And then let's assume kind of fast forward to, let's say 6:30. Okay. That's when most people are pretty much either awake and they're about to commute to work. And so let's just say it's 6:30 and you look out the door and you see a ton of shoppers coming in. And we know that now what? The shelves are most likely stocked, right? Because a lot of times supermarkets are restocking shelves overnight. And so there's not a lot of things to necessarily buy. And all of a sudden you could pretty much, you could buy things relatively easy. Stocks are full, the shelves are full, excuse me. And, it's pretty easy. And we can bring that back to stocks, right? Is that at 6:30, we see that big volume. It's the biggest volume bar in majority of the days. And we see that what? We see high volume. We see a lot of people buying and selling with their orders. And so, of course, let's say, my personal favorite is Funyuns. I love a bag of Funyuns. It's my favorite chip. It's been for a long time. If you guys don't know, that's basically an onion ring. And so let's just say that like you want to grab a bag of Funyuns. And so you grab a bag of Funyuns and you go, you look in the aisle of the chips and you pick it up. And then you realize that there's some shoppers behind you that are trying to grab the same item as well. And so it's the same thing as the stock market, right? There's some demand for stock. You go and you put your order in and you want to buy it. And then let's just say there's still a lot of shoppers in that stock and, that bag of Funyuns is high in demand. And to the point where guess what? There's no more Funyuns. And so you walk around with the bag of Funyuns and some shopper stops you and says, hey, how much would you like for that bag of Funyuns? And you look and you say, well, you offer a price, they provide a bid, and then you decide to sell it to the buyer. And then let's just say the buyer does the same thing and they're walking around with the Funyuns and another shopper comes along and they say the same thing. They go, hey, by the way, how much do you want for those Funyuns? And so you guys can kind of see where that's going, right? Is that you own a stock, it's high in demand. And then of course, as people transact, as volume comes in, right, that stock goes up. It's of course the same thing with a bag of Funyuns. If it's high in demand, it's going to continue to go up. People are willing to pay more and more and more. And so let's just say that this continues. However, the price at this point now has doubled. And so the price has doubled, it's tripled. Let's just say even quadrupled. And how many stocks do we know doubled, tripled, quadrupled? And then all of a sudden this bag of Funyuns has rotated so many hands, right? And we know stock rotation, right? We know that's the float and how many times the stock rotates, right? We know that the people who essentially buy it are hoping that it continues to go up. And so let's just say it's rotated hands. But the problem now is the bag of Funyuns is so expensive. And most shoppers don't feel comfortable, quote unquote, really holding the bag. Okay. And so the current owner looks around for a buyer, right? They're walking around. They're like, well, what happened to all the buyers of this Funyun? I bought it. I thought I could sell it for something higher. And nobody's going to offer what they paid for. And so they bought it for X amount and they're looking around. Nobody's coming up with a bid. And then all of a sudden they said, you know what? Let me at least sell it for the price I paid for it. Okay. In this case, we call it a break-even trade. And so by now, the person's held the bag so long that they don't realize that, guess what? The store has restocked the Funyuns. and basically there's more supply. And so the person who bought the Funyuns realizes that, wait a minute, the shelves are full, and that therefore the value of the Funyuns has essentially dropped, right? And so we know that, for example, with Palantir and a lot of these stocks, when more supply comes out, right, when more people want to sell shares, there's more liquidity, the value essentially goes down. And they decide that they will most likely be taking a hit on the bag of Funyuns, so they offer a lower price than what they paid. Okay, so they paid a certain amount, and they're like, you know what, I got to get rid of this thing. There's more supply. There's more there's essentially people who can buy Funyuns relatively easy. I need to get rid of this thing. And so the problem is that they paid a lot higher than what the Funyuns were worth, and they're unable to find a buyer. And so let's just say that you have, you're looking around for a bid and you can't catch a bid. And then all of a sudden, as you lower the price, you look at shoppers, they're like, hey, you were saying you were interested in buying the Funyuns at this amount. What if I sold it to you for that amount? And then that person says, that's what I would have offered, but you waited too long. You held on too long. And now there's more of that thing to go around. There's more bags of Funyuns to go around. You know what? I'm not going to offer that. I'm actually going to offer this price. And they offer you a lower price for that same bag of Funyuns that they were willing to pay for more just a moment ago. Okay? And so all of a sudden, now the supply is strong. Now you're essentially bag holding and you're waiting to sell. And so the price of the Funyuns is what? It's the price is decreased. And so you're losing value on that stock. You're losing value on that bag of Funyuns. And so now who's in control? The buyers or the sellers? The sellers are back into control, right? So it started off with the buyers in control. The price of the Funyuns ran up. People were getting greedy. They held on. They tried to continue that sort of momentum. The price got too high. A lot of people started feeling uncomfortable buying something that went up that high that fast. And now we're starting to see a retreat. Okay. And so what happens? The bag holder walks away with a bag of Funyuns, and they take that home. Okay. And so, ladies and gentlemen, this is the stock market. Okay, guys, get comfortable with it, understand it, respect it, appreciate it, and know your sort of place. Stay in your lane is really what I would say. And I tell myself that every day, right? I've been chopped several times in this market, right? And so get in, get out. I feel like the market, sometimes it gives you a small green day, sometimes it gives you a large green day, sometimes it gives you a red day, but get what it's meant to give to you. Don't get greedy. Don't stay in too long. Otherwise, you may end up holding that bag. Okay, guys, I hope that's helpful. If you guys have any questions or comments, post them below, and I'll see you guys later. Take care. Bye-bye.